no proof is not enough.
Hey guys, so in this video we're going to be talking about bullish and bearish order blocks, how you're using them incorrectly, how I personally use them and how I believe everyone should be using them, and how they can help you identify bias, where price is drawing to, and obviously give you entries to hopefully make some money. So we're going to go right into it. So first of all, PD arrays, all that is going to be sets of candles that give you bullish or bearish order blocks or bullish or bearish fair value gaps, etc., etc. In this case, we're focusing on order blocks. I just felt I should point it out. A lot of people get confused with that word. What we're looking at here is just simple PD arrays. So the last down close candle before an aggressive upside move that breaks structure is going to create a bullish order block, and we would use the high of the wick to the body, and we'd have a stop below the lows. And in this scenario, bearish order block, the last up close candles or candle, it can be multiple candles, you'll see that once we go into the charts, before an aggressive downside move that breaks structure, we use the low of the wick to the body, and our invalidation goes at the high. So very simple stuff, and hopefully you guys get that. So first things first, we're going to go over the price action from previous day's range, and then we're going to go over the overnight price action, today's price action, and then a 5-minute price action example that I called out and traded. So just to prove to people you can do this in real time. So first things first, when identifying order blocks, they are going to give you your bias, and that's important to know. So when price action is bullish, you will look for bullish PD arrays, and when it is bullish, it will form those for you, and it will deliver to those and then deliver to liquidity. And when price action is bearish, it's going to form bearish PD arrays or bearish order blocks, and it will respect those and move towards sell side liquidity. So it's very simple to understand, and hopefully I can show that to you guys in the charts, and you guys will like what I'm talking about. So what we'll notice, we're going to go to a 15-minute. 15 minutes just very clean when trading, day trading. So we're going to start at that one. So first things first, we have to have a draw on liquidity, and then we look for supporting price action. So let's say we are looking at these relative equal highs up here. You'll notice in yesterday's range, we actually had a nice OTE entry that was given. Actually, it was not given on the ES, it was given on NQ, but we had a move into discount into the fair value gap, so prices should trade higher. But without even knowing that, if we have relative equal highs up here, we look for bullish order blocks to form. So in this scenario, with this down close candle before the aggressive upside move, I wouldn't call this an order block. At least I wouldn't trade that one. Although you can see it gets respected because we are delivering buy side towards buy side liquidity where people's buy stops are sitting. It gets respected, but I wouldn't identify this as one. Just because this is very small, we want to see aggressive moves down that get bought back up. And if you've seen my box setup videos, the aggressive down and up, that's why it's important, because order blocks are exactly that. So we can see we get aggressive down close candles and then nice aggressive candles breaking structure, closing above the bearish order block and the high. So nice, strong bullish candles. And then we mark out, you can either use the wick to the body here or the wick to the body here. This would be where we would look for prices to respect. And you can see the candle bodies respect, but this one wicks down and fully mitigates this order block. And this is something you need to understand. Full mitigation is what creates your equal lows. Because when we're delivering buy side liquidity, that's where it sets up those equal lows for when you start delivering sell side, right? The same way that you can see we're delivering buy side up here, created stops, or where people should have their stops as relative equal highs, or if you mark out these candles, equal highs, and then trade lower, right? We'll revisit those, but when price action's trading lower right here, we're not thinking about those, not until prices reverse. So looking at this, we get bullish order block, tests into it, stop loss goes below this low, which you can see full mitigation happens. Good thing to understand. And then prices trade higher. Where do they trade to? They trade to buy side liquidity because we are delivering buy side price action with bullish PD arrays. So very simple to frame that and understand where prices are going. Now that we've taken out liquidity, this is where we start thinking, where is price likely to pull back to, if it's going to pull back at all, And if it does start pulling back, how are we going to get into it, or how are we going to develop our bias and our trade setups in order to get into that? So with those relative equal lows I mentioned earlier, these are now treated as liquidity. After we've taken out buy side and we start trading a little bit lower, if we start creating bearish order blocks on this side, we can target this liquidity. And if we continue creating bearish order blocks after hitting this, we can then target this liquidity. And then you can continue down the line until you get bullish order blocks formed. And you'll notice once we start going through this, it's very, very easy to tell which side of the market you're on. So we're going to go into replay. We're just going to go like this. And what we need to understand is we want to see an aggressive move higher, like such, and then an aggressive move lower that breaks structure, because that is what your order block is. And then as long as we have a draw on liquidity, this becomes an order block. So if we play this through, you can see an aggressive move higher, big up close candle, not a little doji thing like this. You want nice clean up close candles, and then an aggressive move lower. And the reason that's important is because we know if we're delivering downside, if we're looking for bearish order blocks, they're going to be buying to sell. And when I say buy, when I say they, I mean like institutions, smart money, the algorithm, whatever you want to call it. This is just something that occurs. They're buying aggressively to sell even more aggressively. And if you've ever been trading and you've been like, oh, this price action is really easy to trade, it just like is perfectly going in my direction, and then it just gets completely dumped on, you were a part of a bearish order block forming, right? So good thing to note is you want to see nice aggressive in both directions, nice big candles. So in this scenario, this would become our bearish order block, this whole candle here, and we would look for short entries here, and our stops go above the order block, which you're going to notice you could use the bodies or you can use the swing high. And since we have bearish price action forming, we don't target order blocks. What I see a lot of people doing incorrectly with order blocks is when prices are coming down, so like let's say all these prices are coming down, people are like, oh, this is the last order block and it's unmitigated, we should look to long there. It's like, no, when you get sell side, you're targeting sell side liquidity in the form of highs and lows. When you have buy side, you're targeting buy side liquidity, right? So we target liquidity, we don't target order blocks, because the order blocks only matter when you're delivering in the direction of that order block, which in this case we're delivering lower, so we don't look for that. And in this scenario we talked about before, we are delivering higher towards here, so this order block gets respected, and now it's going to get ran through, right? So in this scenario, you'd be shorting anywhere up in here. After this candle aggressively closes, you can short right there with a stop above, and you're going to target these relative equal lows as liquidity. And if we just play it through, you can see what happens. We get another, let me go like this. We get another aggressive candle up, and then it really aggressive moves down that breaks structure. We took out some liquidity. So if we're going to deliver lower, where are we going to deliver from? We're going to deliver from this aggressive upside candle that got sold through, because that's your new bearish order block and actually formed off of this one. So that's called a propulsion block if you trade ICT stuff. Not the most important thing to know, but we know this should actually give us the more aggressive move, which if we look at price action, we traded it from here to here, 14 points. If we're trading it from this order block all the way down to here, 10 more points, right? So gives us more aggressive move. This is your propulsion block. And the only reason it's a propulsion block is because it formed off of another order block. So now this is our bearish order block. If we're going to have continued bearish order flow, we should not trade above these highs, and we should look for short setups anywhere within it. So if we play price forward, you can see we wick above. This has the potential to make a bearish order block. If we can break below this low, strong candle closes, breaking structure. Notice how we don't. So what is this creating? This is creating buy side liquidity on the sell side of the curve. So we're delivering sell side, and we created liquidity at the lows, and we have a bearish order block above. So if you know what an inducement model is, this would be your inducement model. If you're waiting for that, that's what it would be. If we go and play this through, do we get the inducement? What we'll notice, we had aggressive upside candles here. If we get aggressive downside breaking structure here, that creates a bearish order block. But if it doesn't break this low, we have not created one. And you'll notice we did not break below this low. We had another strong buy turn into a strong sell. If that breaks structure, which it is technically right here, I'd look for these lows. This creates a new bearish order block. And you can see break structure and does so, also taking out that liquidity we created on the sell side of the curve. So this creates a new order block. This is your big up close candle before a strong downside move, breaking structure. We have more short setups because we haven't reached liquidity yet. So we would then look to short in here with a stop above this high. And we're targeting that same low as if you took this one. This is just more bearish order flow giving more entries. And one thing I want you guys to see here is there's a lot of entries, right? So a lot of people miss things. There's a lot of entries. Unless price is moving like this, there's a lot of entries. So we're going to play it forward. You can see we reach into the bearish order block. We do not take out that high. And look at where the candle bodies are rejecting. Right on the bearish order block. More signs of bearish order flow. And then we reach to take sell side liquidity because we're on the sell side of the curve. Hopefully this is all making sense. Now, what did we create off of this order block? We had an aggressive up close candle, aggressive downside move, breaking structure below these lows here, and breaking structure here technically. So let me just get rid of that. This is our new bearish order block, like such. And we would then look for what? We took liquidity. We have a bearish order block. It seems like it's still seeking downside liquidity since we're still creating these bearish order blocks. This is our next downside liquidity because this is fair value gap. This is order block. Those are all things that matter when you're on the buy side of the curve. When you're on the sell side, you really should only be paying attention to these lows. And then we have New York kill zone. What does it do? Let me actually move this. It's supposed to be on the wick. Reaches to the penny. Delivers into our sell side liquidity. And if we go to the daily time frame now, it's going to mess it up. But on the daily time frame, we have the exact same thing we always look for. Delivery into sell side liquidity. Creation of buy side PD arrays or bullish PD arrays. And we look at the wick and open of this candle here. That's where we want to see prices draw to. And if we go on a 15-minute, that occurs under liquidity on the 15-minute time frame. So we're delivering sell side here to get to the bullish order block on the higher time frame. So maybe a little confusing, but under these lows, that higher time frame order block should support prices. And if we're on a lower time frame, we need to look for bullish PD arrays or bullish price action in order to get a part of this. So if we play it through, what do we look for when it comes to bullish PD arrays? We want to see an aggressive down close candle, an aggressive up close candle that can break above those highs. Ideally, we'd break structure. In this case, we're switching to bullish price action. Breaking structure here would just be creating the order block in my head. And the reason is we go on a 5-minute time frame. You already created your swing high here. If we break above that, that's a break of structure on the lower time frame. Break a structure on the lower time frame with your higher time frame bullish PD array or your POI, whatever you want to call it. Makes sense. This is breaking structure. The lower time frame is confirming that higher time frame, right? So creating this bullish order block will form that lower time frame break of structure. And you'll see aggressive down close candle, nice aggressive upside moves, breaking above the highs, closing above it, and creating, first of all, a fair value gap, which a fair value gap in an order block makes it higher probability because it shows aggression, right? Fair value gaps are created through aggression. So that's why it's important to understand. And if we now mark this out, this is your zone you'd look to long in, and your invalidation goes the low of the order block or the swing low. Doesn't matter. Completely up to you, and I suggest you back test it. So we'd want to see it reach down here. And if we're delivering now the buy side of the curve, we don't target some little order block or volume imbalance up here. We target liquidity. And we would target this liquidity. We would target the relative equal highs formed here. We would target the relative equal highs all formed in here. And you can notice we're now targeting the tops of order blocks that were created previously, because buy side delivery targets buy side liquidity, where people that were shorting, they'll have buy stops. That's why it's called buy side liquidity. And buy side delivery is just they're buying the market up, right? So we play it through. We tap into the order block on the 15-minute time frame and then reach for buy side liquidity. And if we go to a smaller time frame now, on a 5-minute, you can notice on the way up, all of these little big, well, you could call them big down close candles, turn into bigger sells. Big down close candle turns into a bigger sell. And if you've ever been trading and stopped out because you got a big down close candle against you and then seeing it ripped right after, it's because they have to sell before buying, right? So if we mark these out, you can see didn't quite get to the order block, reached to this high though. And then we created another order block like such. And unless we take out our buy side liquidity target, we're still delivering buy side, right? Until we've reached the higher time frame liquidity target, we're delivering buy side. So bullish PD arrays, bullish price action should support price. And this is our bullish order block, right? So if we do reach into there, you can see it generated liquidity on the smaller sell side, on the smaller time frame, reached into the order block, and validation occurs under this low. It should reach into liquidity higher. And then what happens after that? Nice down close candles, aggressive sell down, creates a new bullish order block. We close above, break structure. You can see the test right here, that's the bullish order block entry. You can enter it as soon as that occurs. And your stop on this scenario would go at this low, the bottom of this order block here. Again, multiple down close candles. And then price trades into buy side liquidity. And one thing I missed, you could be using this candle, but again, we want to see aggressive moves down. Although this is the one that looks like it supported prices, I want to see the aggressive candles. Those are the ones that matter to me. So that's why I didn't mark that one out. But delivery into buy side liquidity. Now, coming into the rest of the market, what do we expect after taking buy side liquidity? Well, it can sell or it can continue. If it's going to continue, it'll create more bullish price action and it'll trade higher off of that. But since we've taken buy side liquidity, we'll just say we're starting the sell side of the curve because trends make higher highs and then make higher lows, right? So if we're looking for this to be sell side of the curve, where would we want to target for prices to end up going to? Well, looking at this price action just on a bigger scale, higher highs, higher lows, higher highs, higher lows, higher highs. So we'd look for a move into the OTE of this whole move, right? And what we're going to notice there as well is if we go on the hourly, what occurred on the hourly this morning? We created an hourly order block. Aggressive down close candles, aggressive up close candles through it, reaches buy side liquidity. If we're still delivering buy side going into tomorrow, we will respect this order block and trade higher. And what you also could be using, if you wanted to, was a breaker block like this. Up to you. Personally, I would be looking at this whole fair value gap as an area. And if we go to the OTE from low to high, you can see lines up with the order block. So now if we go to the 5-minute time frame, if we're expecting downside after taking liquidity, we would want to see bearish price action or bearish PD arrays form. So if we have two up close candles, if we get a downside move that's aggressive, we would then look for prices to trade, and this would be your whole order block from the highs. And if we kind of mark it out like this, that's where your order block would be created. So if we go and look at this, we get aggressive downside candles, move higher, and then I believe market opened again recently. Now we're to current price. So if we are going to deliver down here, and this is sell side liquidity on a smaller, or sell side delivery on a smaller time frame, then we're going to target liquidity created here, and we'll target liquidity here, here, and here, and then bullish order block will be sitting there waiting for us. So that's what I'd be looking for if you're trying to trade the overnight session, but I normally don't trade overnight session, so couldn't tell you. But we will now go to the SPX, so you guys can see that how this is done in real time. We will go, first of all, let me scroll down so people that think you can't do this. Biasing, this going into the new month and quarter, let's revisit last week's highs. And this was before the New York Open, I believe, should be. I don't know if it'll tell me. Yeah, 749, so before the New York Open, I'm looking for last week's highs. So we're looking for what? Bullish PD arrays. We're looking for buy side delivery. And if we go to the SPX, which is where I took this trade, we're going to look for exactly that. So this was Monday morning open. What do we first notice? We have a nice gap above in price. And this gap, you can just treat it as this is a nice big upside candle because it didn't trade through it, but in the pre-market or overnight session or whatever, obviously it was aggressively sold down and they're gapping it up. So they're aggressively buying it higher before prices even traded. So we look for, you can either use the big aggressive candle or you can use all of the downside candles as your whole order block. And when I say that, I mean, you could use this or you could just use your big aggressive candle like so. And then you mark out the open of that candle. And that's what you'd want to be watching in the morning. And we were. And if we go to the 5 minute now, what do we see created on the 5 minute? We see an aggressive sell that turns into buys that breaks structure off of the 15-minute order block. This is your propulsion block again. And you'll notice it trades into here, does not take out the low. And then what occurs? We seek buy side liquidity to this high, these highs, and last week's highs, as we were looking for. So as far as the call out here, you can see M5 candle, SPX bouncing at the big down candle, second 5 minute candle of the AM session. So exactly what we're watching, exactly what we traded. And I'm going to close that video. I'm going to close this video off here. I hope it helped you guys. I hope walking through all of that price action really gets you guys understanding how to identify order blocks and also identify where price is drawing to based on what's actually occurring right now. Because we know trying to get the tops and highs just using this little order block up here is not going to be a good trading strategy. We want to trade what's happening right now. So if you like the video, feel free to like, subscribe if you want to see more. And if you have any ideas or any questions or comments, feel free to drop a comment. Helps the algorithm. And I will see you guys in the next video.